Hey everybody, this is Jose Blasco. We are about to start in just a few seconds. Can I have a quick confirmation on the chat box so I know that sound is good? A quick hello, a quick hello message would do, and that way I know you hear me well. Wonderful. I'll turn on my video stream as well so I can say hi from the bottom right corner of the screen. And it is indeed time to get started. So we are now live, everybody. Thank you so much for confirming, Tony. Sound is good. Welcome to the session, everybody. Today is December 14, 2020. My name is Jose Blasco. We are doing futures now today. So it's all about identifying short-term intraday trading opportunities, taking advantage of the leverage that we find in futures, of course, always managing risk, but also taking advantage of the beautiful possibility of being well diversified, given the fact that in the futures markets we find commodities, treasuries, market indices, currency futures, metals, energies, all sorts of things that are certainly, again, as I said, diversified, and therefore we can find those unique opportunities. Okay. Before we get started, I would like to highlight the disclaimer on the upper part of your screen. So while I highlight it, please go ahead and read it carefully. This is important information. Please don't skip it. Don't read the first paragraph and that's it. Just read it all. It's very short, but it's important for you to be well informed. Since this session today, as well as any other session that we do, is about trading, therefore it's about money, and therefore there is risk involved, and it's important that you guys are aware of all of this. Very good, everybody. So time to get started. Very nice to see all of you connected. I'm now closing the introduction slide and jumping into TradesStation. And as always, in order to save time, instead of going one chart at a time manually, what I'm going to do is use red screen in TradesStation, which is like having multiple charts open at the same time, but instead of charts, what you see is rows. And in every one of those charts, as you can see, and if you are attending our sessions, you know this by heart, isn't it? So we are utilizing AutoClimate, which is a tool that tells us, and by the way, I just froze the screen. This is a tool that tells us if it's sunny or rainy. Is it time to be a buyer, time to be a seller, or time to stay home? Okay, time to not to trade. There are few times to trade in trading, and most of the time you should stay away because we are looking for high probability setups. That means that it's not always time to trade, isn't it? So AutoClimate giving us those golden alerts, as you can see here, near sensible. This is a golden alert applicable to the Nasdaq futures. So that tells you that, instead of looking at charts one at a time, why don't we go ahead and look at the Nasdaq? It seems that we have a near a potential sensible opportunity in front of us. And while we need to reconfirm everything, that is certainly a good thing to know in order to save time. So I'm going to open NQ15. Okay. By the way, something I also need to tell, which you guys, futures traders, should be aware of this, isn't it? So what's happening on Friday? Okay, what's happening on Friday? Well, on Friday, we're going to have expiration, right? And typically, at least with market indices such as the Nasdaq, the rollover is taking place the Thursday, the week before Friday expiration, and therefore, since end of last week, the contract that has more liquidity is not the Z20, but the H21. And again, it's always good, guys, to utilize a website such as barchart.com. I use this website all the time. Oh, I need to log in. One sec. Here we go. Just logging in. I mean, this is a free website, even though there are some memberships that allow for more functionality, but we don't need it. So if I look at market indices here in this page, and we got the S&P, and I click on it, notice how here. Well, actually, this website is suggesting interesting. Okay, so well, let me make my point here, and you will see where I'm going. This website is still suggesting Z20. Okay, but when I look at volume and open interest, okay, which are those two columns, okay, volume and open interest, and I look at the Z, which is this one, and I look at the H21, which is the one that expired in March 2021. So indeed, open interest is less on the edge contract and is more on the Z contract. But notice what's happening with volume. Volume is more on the edge and less on the Z. Okay, so in other words, because we are doing short-term trading, we want to be in and out and minimize the risk or possibility of slippage. We certainly want to use the most liquid contract as possible, and clearly we can see the edge is more liquid. Okay, so I'm surprised that the website has not updated the Z to be the edge. Okay, but anyway, and that's why we need to check this manually from time to time. So I'm gonna, and by the way, I clicked the S&P. I guess muscle memory, but it's the same thing. If I had looked at the Nasdaq, we would be in the same situation. So notice how I am changing the symbol from @NQZ20 to @NQH21, and I want to save my workspace, so I save the symbol. So that way, I'm ready to go. So very good. So with all of this said, what do we have? Okay, well, from a climate point of view, notice that we have a climate which is confirmed. This is candle number 6 into the climate, and statistically speaking, this climate could last, or it's likely. Let's call it is likely to last 8 candles. If it was to last 8 candles, we would not be surprised, because probability suggests that that's the case. So 6, 7, and 8, that's 3 candles, 15 minutes each. So that's up to a 45-minute trade, something like that, what we could catch. For sure, the markets may extend more than that, and we may have, a 20-candle climate, but that's unlikely. Okay, what probability suggests is 749. I always round up to 8. So 749 is certainly, what probabilities are suggesting. Okay, so very good. So with this in mind, we certainly understand that being a buyer, it's a smart choice. And with that choice in mind, we are going to go ahead and look at our reference value, okay, which is 12,500, which is right there, right? And let's see if around 12,500, okay, let's see if we got UFOs or we don't have UFOs that we can use for an entry. Because notice how price just went into this UFO, okay, and as price went into the UFO, so it seems that price is trying to leave the UFO and continue expanding the climate to the upside. The reality is that any UFO works, or could work, I should say. That one too, that one could work as well. But again, the idea is to identify on-field orders that are positioned in a place where additional on-field orders may appear. So that way you have more odds in your favor, not only the on-field orders that are already available, but also on-field orders that may be added. In this sense, we're using a magnet for on-field orders here, which is the moving average, because when price comes to the average, like it happened here, so often you'll see a bounce, and that's because on-field orders are often added. So taking the trade at this UFO, and we see price going up, could have been a trade, and it would not be crazy to do it. But taking the trade using the UFO, which is lining up with 500, okay, which is the average value that we see as a reference, which in this case would be that UFO, I believe. I need to double check that. So that would be a higher quality trade. And because you would have on-field orders already available, plus on-field orders likely to be added. And the two together is more on-field orders, and more on-field orders equals more probabilities. Okay, so let's see what's the top value of this box, okay, which is 498. Okay, so that's the top value of this box. Let's see what is the top value of that box. 498 as well. Okay, and then the bottom value is 486, and that one, the bottom value is 486. So really those UFOs are exactly in the same location. Okay, so 498 to 486. Now I'm going to say this is a good trade. This is a valid trade, because while it was pointing at 500, now it's 499. The fact is that the current price is 512. So if the Nasdaq keeps falling for another 12 points until it gets here, this value is likely going to be 498, 497, some value which is within those two UFOs that overlap each other, even though they are in different charts. So those UFOs do qualify as a valid entry, and therefore, for me to take the trade, I need to find a valid target. Okay, now I'm going to do something that is not really recommended, but I'm going to do it just so I don't miss the trade in case I have to rush, and that way you guys get to see the execution. So I'm just going to enter the trade. I haven't calculated my target yet. Okay, so that's why you don't want to do that. Okay, the way I did, but I can see there is a strong momentum there going on, and again, I don't want to. I'm just going to push this up. Did we miss the trade by 1 tick or so? Yeah, it seems that it was the low of the candle. So the low of the candle there is 98.25. Okay, so we went 1 tick from entry. Okay, 1 tick from entry. Let me see, 25. Okay, I'll just put my two targets there. I need to calculate this properly. Okay, guys. So the trade is still valid. Okay, everybody. So the trade is still valid. Price went extremely close to the UFO, but to be honest, it went 1 tick away. It didn't touch the UFO. So we are not in the trade, even though we see some reaction, which is nice. Nice to see. But we are still waiting for price to come into the UFO. That's what we're waiting for. And from there, we will take the trade. Okay, now notice I did this quickly because I saw that was going to happen quick, so I placed my stop at 485.75, which is right 1 tick below 486. So if you do the math, 498 minus 485.75, this is 12.25 points, which if I add above 498, that tells me that my safety target should be 510.25. Okay, so 510.25, this is the location for my safety target. Okay, and the other one, which is going to be higher, is going to be my final target, which I still need to identify. Okay, I need to find what's the right place for this target. I mean, if we didn't miss the trade by 1 point, notice that we would have reached already safety target. So this, to be honest, is beautiful to watch. It's certainly unfortunate that we didn't get a feel for because of 1 or 2 ticks of price movement. But again, that's trading, and patience counts. You don't want to now chase the trade and try to catch it and stuff like that. Let's be patient and disciplined and follow the plan, and let's wait until this market comes to us. And if it doesn't come to us, we'll trade other futures markets. There are many more to trade. We don't chase. We don't make up a trade just because we want to take the trade if the trade doesn't meet our rules. Okay, so the last thing I want to do, I want to turn on AutoUFOs to find out where my target would be, and notice that there is a red UFO there. That one is located at 527.25. Okay, so 527.25, and therefore 527.25, that would be the location for that final target. Okay, right there. So let me explain on the screen what we have. Okay, so the idea is if the Nasdaq drops to this point, which coincides with the UFO and the EMA and also that UFO, because those are overlapping UFOs, we're going to take a trade long. Below, we're going to have a stopping point, 1 tick below the extreme value of the UFO, which is 486. So stop is 485.75, and then same distance above, we're going to go with a safety target to scale out half of the trade, and then final target would be 527.25, which has almost been reached, but in any case, we're not in the trade, so that target is certainly valid, and it's all just very, very good. So we just need, well, actually now it has been hit. Every time I draw on the screen, I freeze it. So now that I have unfrozen the screen, you can see that target will be hit. So we could consider actually a further target, but I'm not going to do it because we haven't been filled. So I'm just going to wait to see if we get filled on the trade or not. And also, in 1 minute time, at 11:15 New York time, we will have an update on the climate. And we need to evaluate if it's still going to be an up climate, which probably that's going to be the case. But we also need to evaluate what is the reference value, because we may now have another setup, which may imply taking the trade with that UFO instead of taking the trade with that UFO, because since the market is pushing up pretty aggressively, probably that EMA is going to be recalculated to the upside. Okay, and just to anticipate and to use our 20 seconds left before we get to 11:15, I will say that if that's the case, probably we'll have to cancel the trade. because if I was to do an entry using that UFO, what I cannot do is to have my stop here. I would still need to maintain my stop all the way below, which would create a huge risk, a very, very wide tradable zone, which is not good. So that's it. We got the update is 508, and yeah, clearly 508 it's somewhere in here, which is quite high inside the second UFO. And you may want to have an alert because the current price of the Nasdaq is 530. So again, if it drops 30 points, the EMA will go down, but I'm not sure it's going to go down all the way to meet our value of 498 anymore, given the fact that the average went up. Okay, so out of being prudent, even though it's a shame we missed this trade by just one tick, isn't it? I'm just gonna cancel it. Okay, and if you guys on your end want to set an alert, nothing wrong with that. But to me, I prefer to go back to the red screen and see if an opportunity will be available there. Okay. Joe, why not on the new 987 shares setup? Well, I just said it, because if you take the trade using that one, again, you cannot have your stop here in between, because you would have the risk of having price come to the UFO, stop you out like a tease, and then go all the way, and you would be like, what happened there? Well, what happened is that those on-field orders kicked in, and therefore, to avoid being stopped out and see the price go your way, then you would have to let me say that again. You would have to set your stop below the whole thing. So if your entry is here and the stop is all the way below, all this vertical distance, okay, represents your risk. And therefore, your safety target has to be so much further away, which basically it's where the final target would be now is your safety target, and the whole trade becomes inefficient. And since there are other markets to trade, there is no need to force it. Could you play and look for other combinations of time frames and find a setup with a smaller time frame that allows you for a quick scalp and stuff? You can do many things, but at the same time, in the sessions we have 45 minutes, and I cannot provide so many combinations of strategies, because then it would be very confusing, isn't it? So I'm just very mechanically looking at my climate, looking at my UFOs, looking at my EMA, and if the setup tells me go ahead, then I take it, and if the setup is telling me too much risk, not convenient, then I go check other markets because there are more. So I don't want to force a trade just because I only want to trade the Nasdaq in today's case, which I'm not saying that's what you do, Joe, but I'm just extending a little bit the rationale behind my thinking. Okay, cool. So back to the red screen, what do we have? So it seems that gold is giving us a setup. Okay, so let's go ahead and open our gold workspace, and also, just like I did before, I'm just gonna bring a bar chart here. Okay, come on, here we go. So metals, I want to check the right expiration date. With commodities, certainly you want to check that very often, because those contracts, many of those commodities got 1 month expiration, right? So in this case, it suggests G21. So let's see if we agree with that or not. Greatest volume and greatest open interest clearly is in that row. And yes, indeed, G21, it's the case. So, and that's what happened most of the times, okay? And we have G21, by the way, so we are all set to trade gold properly. So let's begin. What do we have? Okay, well, we have a down climate, which is confirmed, okay? And we have been in this climate during 5 candles, and statistics suggest or imply that the duration of such climate is normally 6 candles. So 5 out of 6 means that we still got, until 11:30 New York time. That's another 12 minutes to go. So if a trade setup is available, we are indeed allowed to take the trade. Now, our trade setup implies entering short using UFOs located around 31.2. And 31.2 is more or less here, and there is no UFO there. 31.2 is more or less here, no UFO there. 31.2 is more or less here, no UFO there. So initially you would be like, okay, no trade. And indeed, right now, no trade. Why? No UFO, therefore no trade. If you take the trade, you still have the climate in your favor, but really, where would you place your stop, right? And you don't have the most important element of our trades helping you. So no trade. At the same time, while the chart on the left is a minute chart, and therefore it's going to take let's say at least 2 minutes for a UFO to form. The charts on the middle and the right are share and tick bars, meaning that anytime, any moment, a UFO may show up. So as we speak, we may get to see something like that happen. Now you have a UFO where you need it to be, and then therefore now you have a trade. So be ready, okay? Be ready. And here we go. We just got the UFO form here. Unfortunately, it doesn't work because the top of the UFO is 33, where our EMA is 31. So in other words, that UFO is below the EMA instead of enveloping the EMA. So again, could you take it? Yes, you could, but you have unfilled orders that you will want to rely on to take the trade, but you don't have the benefit of additional unfilled orders potentially being added, which is the magic of the EMA, helping the UFOs to be even more powerful when combined. We are adding odds by combining methodologies, isn't it? So mechanically speaking, therefore, I'm just going to ignore it and just wait until a red UFO shows up in the right location. And by the way, when we reach 11:30, okay, it may still be a good time to take a trade, because when we reach 11:30, that's going to be 6 out of 6, and therefore I have another 15 minutes to do a trade. So if the market, if gold keeps going down a little bit, that 1830.9 may become let's say 1829.8, and now guess what? Now you have it. Okay, so we'll see if that's going to be the case. So no matter if the UFO is there or is not there yet, you have to prepare. If the climate was giving you so many golden alerts, then you would have to rush into other markets. Since right now the only one available is the one with gold. So what I'm going to do is I'm going to go ahead and prepare by looking for where the target would be. So that way, when I have to enter my trade later on, I will not have to rush. Now, notice that it seems that gold has been dropping for a while, and therefore in the intraday timeframes we don't see much. So I'm going to have to load data all the way to, let's say, beginning of November. So let's go ahead and load first date, November 1st, 2020. Okay. So we just need to wait a little bit for all the data to be on our screen, and then we'll be able to do it. Okay, almost there. Oh, I know. Yeah. I don't know why I always forget, and it's not like I don't do it often. But I guess I got muscle memory of doing something which is not efficient, which is when you add data, when you add candles, you add historical data on your charts. I mean, both AutoClimate and AutoUFOs are quite demanding when it comes to all the calculations that those tools have to make to spot the unfilled orders. It's quite intense, and therefore, if you are downloading data and you are actually processing AutoUFOs and AutoClimate all together, so as you can see, your computer struggles, and it doesn't matter if your computer is very powerful or not. Hey Boyan, how are you? Good to see you, my friend. It doesn't matter if your computer is very powerful or not. Your computer will tend to struggle because the amount of calculations that need to take place is massive. And on top of that, the architecture of TradesStation is a 32-bit architecture. So if you are into technology, you understand the implications when it comes to how many things could be processed at the same time. Okay. Here we go. So now we have the UFOs. Okay. So here's the UFO. So basically what I was going to say is that a little trick that really alleviates when you do that is turn off AutoClimate. Okay. Then do your Auto UFO thing and then turn AutoClimate back on. So it would have been way faster. But anyway, I'm just going to click and hold on this one, and it says that 1814.6. Okay. So 1814.6, that would be the location for your target. Okay, so if a UFO is going to be available, okay, here we go. So the target would be 1814.6. okay, that would be the location for the target. Okay, But again, right now we don't have the right UFO. The UFO that we have here is not lining up with the right. I'm just multitasking a bit here, guys. Sorry for that. So that UFO is not lining up with the EMA. Therefore, that UFO is not valid so far. But again, in 5 minute times now, we're gonna hit 11:30, and that UFO may become valid, as well as other UFOs may be plotted in any of the other charts. Okay, so now if I have to rush, I know my target. Okay, and then I can quickly enter my orders using the matrix and make sure that I'm not gonna miss it. Okay. So that's the plan. Good, Joe. Very good. Let me see your question. How many ticks is too few for a UFO stop? Uh, I use one. I just go on the other side. I just go minimum on the other side of the UFO. Could you add more breathing space? Yes, you could. But to me, that breathing space for stops, I also call it hoping space. And certainly, as a trader, I either, I want to acknowledge if I'm right or wrong, and I don't want to negate to myself the acceptance that my trade went against me, and that's it. Because if in order for you to accept the trade went against you, you need to see the trade go against you for more. Again, you could certainly give yourself more breathing space, and you may be lucky and it comes back to you. But the reality is that if the UFO didn't work, it went on the other side of the EMA. Well, odds are that the climate is changing. So why would you give yourself so much breathing space? So in my case, I just go one tick on the other side of the UFO. Okay. And all of these, by the way, Joe, and for everyone listening to this stream, all of those techniques, specific roles, and so on are discussed in depth in our Survival to Mastery course. I would strongly recommend for the ones of you utilizing auto UFOs to attend that course. While auto UFOs can be used combined with any other methodology or even used by itself, depending on the time frames you use and the markets you trade and so on, I would certainly recommend you to use it because certainly recommend you to attend the course, because like every tool, no matter the tool may be great, but if you have not been trained on how to use the tool, you may end up creating trouble. While the tool is great, it's just a matter of how you use it. So I think that the course could be a very big eye opener. Certainly the YouTube sessions too, and certainly more than welcome, guys, that you ask all of those questions. But at the same time, given the nature of the question, it makes me feel that you may benefit from that type of training. So that's why I'm mentioning it. Okay. Thank you very much. Thank you for your comment as well, Tony. Thank you very much. For example, should I take the trade knowing even if so again, I would just go 1 point on the other side and that's it. Okay, just very simple. You're right, you're wrong, you're wrong. Move on, go for the next trade. In the meantime, if you're wrong and you find out very quickly, just one tick away, you also lost less. And because you also lost less, you hurt yourself less from pure risk point of view. But also because you have less risk, you can also use more contracts. So if the trade did work, you actually profit more as well as now your safety target is also closer. So reaching safety is actually easier. We know the further away the target is, the less likely it is that you will reach it. Okay, so all those considerations are part of why, in my mind, I just go one tick on the other side. Okay. Joe, I wasn't clear if the setup only gives you a very small stop. Do I bother with the trade when the likelihood of getting stopped out is greater? Well, not necessarily the likelihood of being stopped out is greater. I know based on let's call it common knowledge, if you wish. Like I don't know how to put this. Again, for sure, my following comment is 100% respectful with many books in the industry and so on. But what I'm trying to say is, if you were to read a classical trading book, probably they will tell you that, put your stop far away so you have less probability of being stopped out. And the reality is that this, from a purely statistical point of view, makes sense. But then, depending on the methodologies you use, may or may not make sense at all. Because if your methodology is based on order flow, and on top of that, you use a safety target, and your safety target is going to be just as far as the stop, and your stop is 2 ticks away, but your safety target is also 2 ticks away. So then you also have the same probability of being stopped out as being back in safety, right? So I would argue this is not exactly like that. So again, it's all about your methodology and all the comments I made earlier, Joe. And certainly a huge recommendation would also be that you guys put a little bit of time into backtesting, so you get to develop a greater understanding of what you got in your hands. You understand what to expect, and then you can trade in a way that is not emotional. Okay, guys, we just got an update on the AutoClimate. I was expecting this trade to work, but it's not going to work because, let me freeze the screen. Notice how the EMA now, after we updated, it's 11:30 a.m. in New York. Okay, so the EMA it's 1830.3, okay, which is lining up exactly where the stop is, and the current price of gold is 1828. So if gold was to come back to the UFO and we take the trade now expecting it to fall, well, that's great. Think about what's going to happen to the moving average. The M is there for a reason. It moves. So if gold goes up, the EMA is going to go up, and therefore it's going to be 30.4, 30.5, which is above that UFO, and therefore the setup doesn't work for us, unfortunately. Okay, so no trade on gold. And maybe 15 minutes later, but then 15 minutes later, what's going to happen with the climate, right? So it's going to be 7 out of 6, and then this trade would not be taken. Okay, so I'm just going to close the gold workspace and go check other trades. And this is when it's important as a trader to always stay calm, stay patient, etc., etc. NASDAQ still giving us an opportunity here. So I'm going to go back to the NASDAQ and take a look. Yeah. And also, very nice to see you, Mark. I see your message now. How are you, Mark? Very nice to see you. So, freezing the screen here. So what do we have? The climate is an up climate, which is confirmed. It's been running for 8 candles. Probability suggests that the climate would be 8 candles. So we got 14 minutes to go before the climate changes, okay? And if we were to find a UFO located around 12,511, which 12,511 is somewhere here, or somewhere here, okay? So that one may work, okay? And by the way, price just went there. So yeah, that was 511.5, okay? So now, problem, this trade is not to be taken, okay? And why is it that this trade is not to be taken? Well, because again, with the stop being 498.20, with extreme being 498.25, we need the stop to be 498, and you probably remember from the first example today that 498 was the next UFO, and therefore the stop has to be below the whole thing. And then again, I made all those comments earlier. Okay, so the trade may very well work. We can see a reaction to the UFO. It's all great, but again, I always use the term convenience. So from a convenience point of view, from a risk management convenience point of view, this is not a convenient trade because my safety target will be so far away, just as far as how far the stop would be. And therefore, getting to safety is actually just as difficult as reaching a target. And therefore, the safety target is a target. It's not a safety. It's not a safety tool. It's just a target, right? So then you will be taking this trade like you didn't use safety, and it's not convenient from a risk management point of view. Okay, so because of that, no trade. So good, not a big deal. I'm just saying, not a trade on the Nasdaq. Okay. Very good, Mark. Looking forward to receive your email. So back to what we have here. And again, let me zoom in. So I'm zooming in here, and so what can we see? Well, we can see that with the near and sensible, it's only the Nasdaq, but we already said it's 8 out of 8, blah, blah, blah. So no trade on the Nasdaq. And then we have 2 more golden alerts, but notice how we can see the word hopeful. Okay, so hopeful means that this market has extended too much. Okay, now, of course, the values that you will see here for AutoClimate statistics, okay, may vary if you compare the values you get on the radar screen versus the values you get on the charts. And the reason why is very simple. It depends on how many candles you load. Statistics will vary, right? So on the radar screen, if I go to Edit AutoClimate, and I look at how many bars I'm adding, so here I got 200. If you look at my charts for any one of the AutoClimate charts, and I show you how many candles I'm loading, So you can see it's 500. So there will always be a little bit of a variation, right? So if I look at NASDAQ, we can see 749, 533. So keep those numbers in mind, 749, 533. If I look at the NASDAQ on the red screen, okay, we can see 871 instead of 749 and 513 instead of 533. So there is some difference. It's normally not that major, but there is a little bit of a difference. So when you see hopeful, in one hand, you could be thinking, okay, that's a hopeful trade, I'm gonna pass, because we don't like hopeful. We are traders. We rely on stats, not on hope. So a hopeful trade is something for us to pass. But at the same time, especially when you have few opportunities like now, and you got time, okay? So it's always a good idea to look at, those values here, okay? In this case, I'm gonna be looking at the values for the down markets, because both of those opportunities have a red background. So it's an opportunity to short. So I'm looking at the down statistics. And then what I will compare is I will compare the current values, which is 6, with the value on the left. Okay, and with the euro contract right here, notice that we are talking about 6 out of 3. So even though there will be a difference if I load a chart, I would certainly expect this to be very hopeful, because 6 out of 3, it's a lot of difference. Okay, but here you got 6 out of 544, right? So it's kind of like 6 out of 6. So in other words, if I was to load gold, which we already seen gold, but since there are no other opportunities so far at this moment in time, I'm going to take my time to explain it. So again, notice how you can see that there is a little bit of a difference, 584 with gold on the chart versus 561. Sorry, that's crude oil. Where are you? Gold here, 544 here with gold. So there is a little bit of a difference. But again, there will be times where you will move into the chart, and you may see this value here to be 8 or 9, because in those 500 candles, right, you got 300 candles extra. Maybe something extraordinary has been happening in recent times, and when you do the stats with a bit more data, then it basically reveals that there is a little bit, potentially a bit more opportunity, or a little bit more of a lasting opportunity than what you get to see on the red screen. So when you have time, okay, it's always a good idea to double check with the chart, because the chart may actually validate a trade that here shows as hopeful. You may still have it as sensible, maybe for one more candle, the last one, okay, but maybe you still gain one more candle. And it's always a good idea to check if you have the time. Now we just got a new alert with the Russell futures. So let's take a look. This may be the last trade of the day. So hopefully this one will trigger and we'll be able to execute. Joe, just one more. If I follow the rules exactly and the potential profit is 20 ticks, but the setup puts the stop at 2 ticks, do I even bother with a trade like this? I have no room or leeway. So if you are about to make 20 ticks, the stop is 2 ticks. Well, the stop cannot be 2 ticks, because that means that your UFO is 1 tick. If your UFO is 1 tick and the stop goes 1 tick beyond, that is 2 ticks. So that would mean that your UFO is a line, is not a zone. It's actually a horizontal line. So that example will not work. Okay, will not work. Maybe if you want to rephrase it, just to make sure I understood you well, but you cannot have a 2 tick risk, because that means that your UFO is 1 line. Okay. So the Russell. By the way, changing to H21. So reloading here. So what do we have with the Russell? Okay, so with the Russell we have then 304. Yeah, so then 304, it's fine, because you will have your safety target as well at 304 ticks, right? So it's more likely to hit the safety target than the stop, given the climate and the UFOs, and they're just as far as the stop, so you should be fine. Okay. Now, again, maybe you're trading a very liquid market, and if that market got a very wide spread, such as 3 ticks, So then you should not do it. Okay, why would you trade an illiquid market? Okay, that's again another conversation to have that we also discuss in the course I mentioned before, Joe. Um, you need to draw a line when it comes to which markets you take, and the lower you go into the time frames, the more liquid the market you should trade. If you are trading, I don't know, orange juice futures. Okay, this is a very bad joke, by the way, but orange juice is not liquid in the futures markets. It's very liquid when you drink it, but not liquid in the futures market. So you're gonna have a very wide spread, and then if your UFO is smaller than the spread, then you may not even get filled when price goes to the UFO because of how illiquid that market is. So just make sure that the markets you trade are liquid, and then whatever you see on the screen, you take it. Okay, if it's 3 or 4 ticks, you may be like, oh, my stop is very close. Yeah, indeed, but your safety target too, isn't it? And you have the UFOs and the EMA and the climate in your favor. So, I would say no need to worry. In any case, when I say no need to worry, I say it on purpose. I use a word that is often used in environments and not related to trading, like you play with your kids and you say no need to worry, right? So it's a very informal word, and the reason why I use that word is because that word is an emotional word, and that's how I feel you feel when you type your question, Joe. You feel unsure, you are undecided. Is the trade going to work? Is it not going to work? So I could sense a little bit, maybe I'm thinking too much, but I could sense maybe a little bit of trading psychology impact there. And apart from, for sure, working on your trading psychology, and don't miss the sessions that we do on the Fridays with Reynaldo, the Head Start sessions. Okay, but apart from working on your trading psychology, certainly a very healthy exercise would be to backtest. Because if you were to backtest the methodology with a specific market, and you get to see what happens, so little by little, as you see your methodology working for you or not, depending on the markets you use and the time frames and so on, you will get to understand that, okay, so now I have no problem to take the trade because, I've seen what happened after backtesting, instead of, if it's 3 ticks, should I take it or not? So it really depends on the markets you trade from a liquidity standpoint, as I said, because if the market is liquid, just take what the market gives you, right? We cannot change how thick or thin a UFO is. That's given by the market, not by us. Okay. Long explanation, but again, a very, very good question, Joe. Very good question that certainly denotes the time and effort that you're putting out there, and that's the way to go. That's how you build up, the skill, the experience, the confidence. So keep up the good work. Okay, that's well done. Anyway, back with the Russell index here. Okay, so we have a climate which is confirmed, thick and red, 3 out of 5. Certainly, this is the right time for us to take a trade. Okay, and the reference point for us to take a trade is 34. So again, we're going to do the same exercise, looking at UFOs located at 34. Did I say 35? I meant to say 34. If I said 35, sorry for that. So we are looking at 34 and looking for UFOs. And bad news, notice how they are UFOs, but they are located higher. So what do we need to do? Wait. Wait for what? Well, wait for either a UFO to form in the right location, which again, as I said before, especially with the share or the tick charts, this could happen anytime, or wait for time to pass. In 2 minutes time, we're going to have an update on the EMA. This is going to be the ending time of the session, by the way, at 45, but also the EMA will update, and the moment the EMA updates, it may update lower. Maybe it updates 1932, for example, and now instead of looking at UFOs at 34, you would be looking at UFOs at 32, which is closer to where the price is. Currently price is 32.90, and if that was to be the case, so next thing you know, now you have a higher chance of a UFO forming sooner, and then you may have an opportunity to take a trade. So again, it's all about patience. And in the meantime, as I said, when we looked at the trade with gold, this is the perfect time to go ahead and look for your targets. So if you were to short the Russell in the common time frame, we have a target that we need to be set at 2730. Okay, that would be the UFO, 2730. Okay, so I'm just gonna write it down. 1927.30. Okay, that would be the target. Okay, if we were to go short. And again, I don't know if we'll be able to go short or not until we have a UFO and we can evaluate the location of such UFO in relation to where the EMA is. So we got a few seconds for that. Well, 1 second actually. Here we go. Update. Okay, so I was quite off actually with my 1932. Actually, the EMA updated at 33 point something. So the climate is still down. But again, we are looking at a UFO forming at 33 point something, which so far we don't have. So I will need to leave this trade for you guys as a homework. So you can go ahead and practice it and wait for the setup to appear in a proper way. The one thing that you know is the location for the target, 1927.30. And anything else here? No. Crude oil and the Nasdaq are hopeful, so those will not count. Yeah, so it's the Russell Index, guys. The Russell Index is still there, and again, it's all about waiting for the UFO to form. And if it does, you may have an opportunity, knowing the target is 1927.3. You will be able to execute this trade yourself, my friends. As always, it's been my pleasure to conduct the session today. Very quick before we go, especially for the ones of you that are newer to the sessions, I would like to point at a couple of things. Oh, not like that. So first, I would like to point at our calendar that you find on our website. Okay. So today is 14 and futures with Jose, I guess it's quite obvious. Tomorrow we're going to have futures with Pedro. Let me close this window here, guys. Sorry for that. So we're gonna have the session with futures with Pedro. There is a small chance for the session to be cancelled actually, because Pedro is not feeling 100% well, but I believe we should be okay. But we'll see. Okay, just keep that in mind. Keep checking the page just in case, guys, so you know. And then later at 10 p.m. New York time, Bert doing Forex as well. And then we got Becky with Forex, and then Andrew with Forex, myself with options, Reynaldo with trading psychology, and finally Becky with solid as a stock. Now, here's a little trick for some of you that may not know. Actually, two tricks. Number one, when you put your mouse on top of one of the sessions, it tells you where the session is taking place. YouTube channel today. But there are other sessions, for example, here's Becky, where if you look at it, it says in the FX Street website. Okay, so there are certain sessions that we run in places other than the YouTube channel, so don't miss them. The one with Ronaldo, for example, is going to be on our YouTube channel, but last week it wasn't FX Trade. So again, make sure you are in tune with the sessions, okay? And also, let's say you want to attend the session with Pedro tomorrow. So one very useful thing as well is that you click on it, and you see here next to the infinite sign, there is a link. Okay, so if you click on that one, sorry for that, I just clicked in the wrong place. So if you click on that link, it will bring you to a place where you can now add this session to your own calendar. Maybe use Outlook, you have an Apple calendar, whatever, and you can add it. That way you don't miss it. You have your own reminders, and here also you have the direct link to get into the sessions. Okay, so that way you don't miss it. So that's one thing. Okay, and then another thing I wanted to show you, for example, since Boyan is with us, okay, so I'm going to use Boyan. So if you type tradewithufos.com/Boyan, you get to a Boyan page, okay, where you could sign up for the Trade with UFO membership, which is free. I believe all of you should be part of it already, but just in case you are new to the sessions, or you're watching this recorded, or you just found us on YouTube, as a coincidence, welcome, by the way, if that's the case. But if you are not there, just subscribe yourself, so that way we can send you emails, reminders, calendars, direct links to recordings, etc., and we keep connected. Okay. Then here you can see that you have the coaching space with Boyan. But then what I wanted to point out as well, which is very powerful, is then the section with questions and answers at the bottom part of the page, where those questions and answers are very, very useful. So, for example, Joe, you had very, very good questions today. Any other time you may have questions, okay, and you may feel that apart from interesting to you, they're interesting for others, which, by the way, that applies to 99.99% of questions that we have. So you can go ahead in here and type them, okay, type them so we can give you answers, or search for them. Okay, so let's say you have a question about time frames, okay, or whatever, so you can just type here on the search box, and when you click search, you will be given some of the some of the questions that talk about timeframes, and you can go ahead and get to see the answers, okay, which it's normally very, very useful as well, because you learn from others, which kind of accelerates your learning. So I just wanted to point at that. Okay, normally we spend all the time with the charts, but I thought that this could be useful too. Anyway, my friends, as I said 5 minutes ago, it's been my pleasure to be here for you today. You guys take care, keep up the good work. Send us questions either directly or through the pages on the website. Be in tune with us and keep up the good work. Just reviewing the chat box in case there is any final question. No, that's it. We're good. Okay, guys. So one last request before we go: give us a thumbs up if you guys are happy with what we do, and if you're not, let us know, guys. Shoot us an email and let us know what is it that we're not doing that you think would be needed for you to help you improve and do a better job in trading. Let us know, because certainly we are here for you. So we just need to communicate to be in sync. Okay? You guys take care. See you soon. Bye-bye. Take care, everyone.